So on Sunday, it seems like deals always get announced on Sunday, or things happen on Sunday. David and I spent some time yesterday working on KKR, and David's got all the deal details. David, what did you think about this?
Well, the first question, Aaron, I think the question investors are continuing to ask right now is why now? And that's certainly a question that you put to people who are at KKR, and there are any variety of answers, which we'll get to in a moment. Let's start off with the deal itself, because it is a complex one. There is no new capital being raised here. It is not an IPO. In effect, it's an exchange offer is what it really becomes. KKR is going to exchange shares in itself, in the holding company, for KPE, which is a fund that it listed on the Amsterdam Exchange that gave investors an opportunity to participate with it in investing. There's a look at what happened to KPE, which was buying the debt, the equity of KKR deals. It was a captive funding source for KKR. It has performed terribly. Now, KKR, of course, claims the asset value of KPE is far in excess of its stock price. By the way, this morning in Amsterdam trading, shares of KPE are up, as you might expect, sharply. So KKR is saying, hey, if we trade at 12 times what we think will be our earnings, each KPE unit will be worth $19.20, still well above where it's trading, by the way. KPE shareholders would then own 21% of KKR. Remember, they're going to give them 21% ownership of a new KKR, which KKR is saying it believes will be valued somewhere between $12 and $15 billion. That's how you get to $19.20 for each unit. And, of course, if they own 21%, KKR's 79% is going to be owned by its partners. Now, why now? Well, one key thing here is to pursue new lines of business, including, and this is from their presentation on the conference call that's still ongoing, fixed income, capital markets, infrastructure, and mezzanine. KKR is certainly trying to create a new financial services company that is one well beyond simply private equity investing, which, of course, it's had a great track record at doing, really the first firm that ultimately did large deals of any kind, a 26% annualized return over that period. Really amazing. Of course, many would say, hey, yeah, if you could lever the S&P 6 times, you would have done pretty well, too. But KKR will be on the NYSE if, in fact, KPE shareholders vote in favor, which they seem likely to do. The new stock as well will give KKR the ability to keep and attract employees. That can become a key thing in this current environment, and would allow KKR to do acquisitions. Say things things get a bit better in private equity, fee streams start to increase. Maybe you get higher earnings, a higher multiple. You want to go out and buy a brokerage firm? I don't know. Maybe you can. Those are at least a variety of the reasons. But there are still questions as ultimately, Aaron, as to why KKR, if it thought KPE was undervalued, didn't just liquidate it and sell the assets it controlled for what it says would have been a lot more money instead of going this route. That's a question I haven't quite fully answered yet, but let me send it back to you.
All right, yeah, and it's interesting when you talk about what they're trying to do and why now. It's interesting, David, some of the thoughts I had on this. Obviously, there's two big competitors out there, two companies they could want to follow, Blackstone being one and Goldman Sachs being the other. The two big IPOs that people think about in this industry, and KKR is making it very clear Goldman Sachs is the model they're looking at, to David's point about whether they're going to be doing deals, not Blackstone. And to that, I just want to take a quick look at KKR versus Blackstone, because this is perhaps one of the most important things about this deal. KKR is going to have a board that's composed of majority independent directors, and they are not going into the advisory business. So no M&A advisory, no underwriting. That, of course, is what Blackstone has been doing, and Blackstone's board, of course, is not independent. So they're trying to be more transparent. That is one important takeaway. And then in terms of the other question, and I thought this was just an interesting thing, if you look at KKR doing this now, maybe it does show more optimism about the long-term future. Their headcount has increased 25% over the past year. They got about 500 employees now. It's a pretty large increase. And infrastructure is certainly one of the big areas where they are putting a lot of those heads, as well as real estate investment. Mark.
Okay, up next. Gosh, it feels